Think we have everyone in already. Okay, so just a couple more people to admit. And I think we are good to go. Okay. Okay, so I think everyone is in. Can everybody hear me? Okay.
Yes, good afternoon.
Okay. Fantastic. So hello, everyone, and welcome to our webinar, and thank you for joining us today. My name is Ricardo Jesus, and I'm a private wealth manager at Chase Buchanan. So throughout the year, we do host several different webinars, but today we chose to focus on advice for Americans moving to Portugal. And I bet that you could tell by my accent that I'm Portuguese, but I lived several years in the US. So I kind of know firsthand that moving overseas, moving to a different country could be quite complex, and we're just here to try to help. So we organized this webinar and included a few external partners that we collaborate with, which I'll introduce in a second. And the objective is to give you some insights and some valuable advice on the implications of moving to Portugal as an American, and give you an opportunity to ask questions and see most of your questions being answered by our local experts. So I will begin by introducing the team of the panel of the presenters that we have today. So it's going to be me and Scott Evans from Chase Buchanan, Virginie Lebalaire from We Immigration, José Calejo Guerra from CCSL Advogados, Alejandro Costa from DS Intermediários de Crédito, and Eva Slacheva from Moneycorp. And each of the presenters will have a chance to introduce themselves a little bit better because they know exactly, they're experts in their area. But here's the process that we'll see today. So Virginia will start by addressing the residency process and the visa requirements first, and be followed by Alejandro with some of the real estate considerations and how they can help with the mortgage process. Jose will then touch a bit on the tax planning and explain the benefits, as you're probably aware, with the NHR program and some of the implications that it has for Americans, which could be different from other nationalities. And after, Scott will address the type of financial planning that we help our clients with, especially if you're looking to stay here, say in Portugal long term. And in the end, Eva will address how we can manage a bit of the currency risk, especially with dollars and euros, and how you can protect against that risk. In the end, we'll have a Q&A session, and I will ask you if you can insert your questions in the chat box as we go along. In the end, I will be collecting those questions, and I will ask each of the experts to address that question. Okay? So, without further ado, I will pass over to Virginie to introduce herself, explain what she does, and touch a bit on the residency process and the visa requirements here in Portugal.
Thank you, Ricardo. Hi, everyone. Very happy to be part of this webinar. Very happy to have you here, and very happy to be talking about immigration to Portugal. Since you may know, immigration is always a important and tricky part of global mobility. So today we're going to see briefly, because obviously we're not going to enter into details since immigration is each case is very particular, but we're going to do what you're able to do and not do in Portugal, focus quickly on work visas, and then speak about the specific visas, such as the Golden Visa, D7, D2, and D8. Basically, if you're a US citizen, you benefit from the visa waiver program, which means that as a US citizen, you can enter Portugal and the Schengen zone for 90 days. During these 90 days, you're authorized to have touristic and business activities, which means you can attend business meetings, go to conferences, meeting colleagues and clients, but you're not allowed to work. And that's a very important thing to keep in mind. You have no right to work under that visa exemption. The second thing to keep in mind is that the Schengen area has a rule that is not very popular, but still really important. Just coming back a bit. That is really important. It's the 90/180 Schengen rule, which means you can enter 90 days, but then you have to leave 90 days. Basically, it's going to be 3 months in, 3 months out, 3 months in, 3 months out, all through the years. You cannot stay longer than 90 days. It's important to have that in mind as well, specifically because in 2024, the Schengen zone is going to create a travel authorization system, just like the ESTA for the US, for instance. And they're going to be able to check even better who's entering and who's staying longer than they should. So really keep that in mind to help you calculate, because it's not that simple. I've put you a link. You will receive anyway all the documents once we're done with the webinar. But this link will help you enter your entry dates, your exit dates, and let you know exactly how long you can stay and when you're supposed to leave. If you're not a US citizen here and that you do not benefit from the visa waiver program, because that's a diplomatic program between countries, you need to obtain a C visa before entering the Schengen area or Portugal. You need to obtain it at the consulate of Portugal in your country of residence. If you want to stay longer than 90 days, you need to go through specific immigration processes and obtain either a work and or a residence permit. That's what we're going to see today. If you're FYI, whenever you have a residence permit in Portugal, you have to be aware that you cannot be out of Portugal for more than 6 consecutive months or 8 non-consecutive months during the validity of your residence permit. So that's something to keep in mind as well. Now we're going to go very briefly through work permits in Portugal. So that's really if you have an employer in Portugal sponsoring you. So that's different from the visas we're going to see a bit later. That's really when you have a work contract in Portugal and someone sponsoring you. So it could be either a residence visa for employment, could be a highly skilled work visa, which is specifically for tech people, could be an intra-company transfer visa. That means that your company in the US is sending you to the branch in Portugal, or it could be a seasonal work visa for agriculture or tourism. By definition, that's going to be a shorter visa. But again, that is really like employer-sponsored work permit. Now, the other specific permits in Portugal that are not linked to an employer are, of course, the Golden Visa, which is quite famous because Portugal was one of the first countries to launch it. Now, for the visas we're going to be talking about, you will see in the document whenever you receive it that I've done a quick presentation. I've talked about the conditions, what you can do with your family, and an estimated timeline. So I'm not going to go through all details for each visa, but you're going to have them in the document when you receive it. Basically, the Golden Visa, it's a residence permit by investment. So it's for a person wanting to invest in Portugal, whether it's in real estate, creating a company, transferring capital, or investing in an already existing Portuguese company. It's released for 5 years. And after 5 years in Portugal, you can request Portuguese nationality if you want to. Again, I'm not gonna go through all the details, but basically, you can bring your family as long as you can prove the relationship with your spouse or partner, and as long as your children are under 18. And the timeline and the process is always going to be a bit the same, is that you're going to prepare the file, you're going to apply at the Portuguese consulate in your home country. Then they're going to go through your file, ask you more documents, more information if required, and then they will release a 4-month entry visa, which will allow you to enter Portugal. And once you're there, you have to turn this visa into a residence permit. You also have to do many other things. Obviously, my colleagues here will tell you about all the other information you need to have. But basically, that's going to be the immigration process. For the golden visa, it's the fastest one. Let's say it's usually released. I mean, the whole process is around 4 to 5 months. For the other visas we're going to see now, it may be a bit longer. It's always going to depend on the authorities' workload and availabilities. So it can really vary from depending on the time of the year, depending on the consulate you're gonna apply at. So that's for the golden visa. Then we have the D7 visa, which is the passive income visa. That's for people wanting to retire in Portugal, or we can prove that they've got enough passive income to maintain themselves financially in the country. Basically, the idea is really to prove that you're going to have enough money on your own to be able to live in Portugal. It's usually released for 1 year, and then you renew it for 2 years if the conditions are met. And again, that's going to lead you to 5 years of residency. After that, you can request the Portuguese nationality. Same thing, you're going to have to prove you've got financial means. You're going to have to prove you've got an accommodation in Portugal for at least 12 months. You need to show a lease agreement of at least 12 months. And all the other documents proving that you're covered in terms of social security and that you've done nothing bad in the past. So you have to show a non-criminal record. Also, it's important to know that you're supposed to stay at least 183 days in the country to validate the visa and have it renewed if you want to. Oops, sorry. Same thing, your family can join, and the timeline and process is going to be, it's always going to follow the same steps. Now we've got the D2, which is the entrepreneur visa. That's really for entrepreneurs, freelancers, independent service providers, or contractors. As well, released for 1 year. You can renew it 2 years twice and reach again the 5 years limit to request the Portuguese residency. For that one, you're going to have to prove you've got the ability to set up a company in Portugal, or that you've got the financial capacity to do so. So it's going to be a minimum of 6,000 euros investment required. And what is going to be really important is that you're going to have to prove, you're going to have to explain your motivation. So you're going to have to show a solid business plan, giving all your financial projections if you intend to hire people in Portugal, how it's going to be working, what's going to be your social capital, and you need to give a very precise motivation letter explaining why you're choosing Portugal. So it cannot only be, it's sunny, people are nice. It has to be really much stronger than that. And of course, as for the other visas, proving that you've got enough money, proving that you're going to be covered in terms of health insurance, proving you're going to be living somewhere, and proving you've done nothing wrong in the past. Same thing for the family and the timeline. And the last one we're going to see today is the digital nomad visa, which is a bit more recent and has followed the digital nomad visa fashion that is going all around. This one offers 2 options. It depends on how long you want to stay. It can be for 1 year, 2 years, but the first choice you're going to make is going to have consequences on the next year, on the process of renewing or not your digital nomad visa. So that's really for digital nomads, freelancers, remote workers. And for that one, you're going to have to prove you've got a minimum income of 2,800 euros per month. And this money needs to come outside of Portugal. You cannot work for a Portuguese company, for instance. It really needs to be some work contract with a company that's hiring you as an entrepreneur, as a freelancer, or an agreement, anything showing, again, that you're going to be able to maintain yourself financially through contracts, work contracts or work relationships outside of Portugal. And as usual, proving the thing I already told you about health, non-criminal records, and accommodation proof in Portugal. This one can be a bit faster to obtain. Should be around 3 to 4 months. Again, that's really going to be depending on the authority you're going to be applying at. So I think that's it for my side. Obviously, feel free to ask any question you have in mind, and I'll be happy to answer by the end of the webinar. And Ricardo, the floor is yours again.
Perfect. Thanks a lot, Virginie. That was really, really helpful. And now I will pass on to Alejandro, which will be introducing himself and addressing the real estate considerations and how they help with their mortgage process.
Hello, everyone. Good afternoon. Thank you for having me. It's nice to be here virtually. Nowadays, it's everything like this. I will not be using many PowerPoint slides, so I'll be doing a bit of a cappella. Mortgage in Portugal. Okay, so what I've been feeling is that many people don't know they can get a mortgage in Portugal with the income they declare abroad. Okay, and of course, buying a property overseas, it's a milestone. I get it. It's an important decision, and for some people, a mortgage is an option. So in Portugal, you have many mortgage types. Okay, when I say types, is because you can go with variable rate, you can go with fixed rate, mixed rate. Okay, in Portugal, we obey by the rules of the European Central Bank, and so we have Euribor, which is the European offered rate. Okay, and when you go in a variable rate, for instance, you have a 3 months Euribor, a 6 months Euribor, or a 12 months Euribor. And this is how variable it gets. So it gets reviewed every 3, 6, or 12 months. For obvious reasons, the 3 months Euribor is cheaper, and the 12 months Euribor is a bit higher. Why? Because having a 12 months Euribor is like having a fixed rate every year. Let's call it this way. So if I want in Portugal, I may use a mixed rate. So I can fix it, for example, for instance, for the first 2 years, and then have the remaining period in a variable kind of rate. Okay. So, and then I can go fully fixed. The rates now are between 3 and 4, okay, depending on all of this. Because everyone believes that the rates will go down next year, what is happening is that in some cases we have fixed rates for 2 years lower than the variable rate. Because the banks know if they fix now, next year the rates will go down more than likely, and then they will have a locked rate for a longer period. Okay, loan to value is also important in Portugal for banks, especially after the subprime crisis in 2008. Banks in Portugal would make mortgages up to 120%. Yes, so they would go over the purchase price at that time. Now, because of what happened before, they learned the lessons. We have a saying in Portugal, depois de casa arrombada, trancas à porta. After our house gets robbed, we put locks at the door, right? So basically now, what the Portuguese Central Bank, in accordance to the European Central Bank, what they suggest the banks to do is to give a loan to value up to 70% of the valuation. However, it's a recommendation, meaning that some banks follow that recommendations. Some of them go up to 80%. So, for example, 3 or 4 banks can go for US citizens can Hello?
Yeah, sorry, just a
You
bit of a
lost me,
connection
right?
problem. Yes.
Okay, so yeah, as I was saying, for US clients, some banks say that you can go up to 80% of the of loan to value. Okay, so meaning that you would have to. Hello, sorry, you lost me again, right?
Yes, it's just a connection
So
sounds.
as I was saying, you can go up to 80%, meaning that you have to put down between 20 to 30% down for equity. And of course, tax. So tax, to make it simple, is around 7%. Stamp duty, IMT, which is the tax you pay to the town hall, the municipality. So basically, this is it. To get approved for the mortgage, you have two challenges. The first one is the same as everywhere, I believe. Get approved by affordability. So send my payslips, my W-2s, 1040 forms in the US. I believe this is what you use. My Experian credit report, Equifax credit report, to get my affordability check if I am eligible for mortgage in Portugal. This is what I need. If I get approved by affordability, so I can, my DTI, my debt to income ratio does not exceed 50% of my net income. This is important, net, because in the US, I believe for mortgage approval, you use gross income. So in Portugal is net income, okay? Then I can move forward for the evaluation of the property. If the evaluation matches the price, then I'm okay. So these are the two challenges: affordability plus evaluation of the property. And then public deed. So as simple as that. So costs and fees, as I said, tax, 7%. If you use a lawyer, Jose is here and maybe he won't let me lie. It will cost you around 1%, maybe. I think this is what the market says of the price of the property, 1% over the price of the property. I will let Jose get to that later when I'm talking about mortgages for houses. Okay, so this is what I mean. And an important thing is, if you pay off your mortgage early, you will have a 0.5% penalty if you are using a variable rate, and you will get a 2% penalty if you are using a fixed rate. So usually this is why we sorry, you lost me again. So we usually tell our clients to go for a mixed rate, so they can have the opportunity to pay off the mortgage a bit later when they have a variable rate. Okay. Another thing that I would like to say is that working with a mortgage broker like us gives you saves you time and effort and money, because we work with all banks and we can search for the best options. We do not charge any fees in Portugal by law. The law doesn't allow us to charge any fees, except wine bottles. Okay, but we do not charge any fees to our clients. We are forbidden to do that. We get paid by the banks, and this payment doesn't go into your monthly installment. Okay. So, but I'll take lunches, dinners, bottles of wine, that I can take. Okay, Ricardo, thank you very much for your time and for trusting. And thank you, everyone. I'll be here for the Q&A.
Fantastic, Alejandro. That was very, very helpful. And to follow up on that, I will invite Jose to address some of the tax implications and a bit of the tax planning, and also just explain shortly what the NHR is. And yeah, so Jose, floor is yours.
Very well. Thank you very much, Ricardo. Hi, everybody. Very nice to be here. Very nice to meet you. Just one or two things before we get started. The first one to Ricardo. I'm not sure if I don't think I have access, or maybe I don't know how to have access to the slides, so I'll ask you to move forward to the next one if you don't mind.
But
And more for the general audience, just a quick background on myself. I'm a tax lawyer. I've been practicing for close to 20 years now. I am a Portuguese qualified lawyer, but my background is a lot focused on the international side of things. So we do a lot of international tax work, and that comes in a lot with working with people who move from wherever it is to Portugal. I am not a US qualified tax advisor, so I don't do US tax advice, but because of this inflow of US citizens moving to Portugal, we did, with the years of experience, we did become fluent in some of the uh, sort of terms and particularities and some of the US tax rules that come into play for people when they move. But in any case, if for specific advice or for compliance, filing tax returns and whatnot, we do that on the Portuguese side. We don't do that on the US side. So that's an important part. Today, I have a few slides. I'm not going to be very concerned about sticking to the slides, but it's generally speaking about a brief overview of the general features of the Portuguese tax regime and how that would be relevant to you, then focusing on the NHR, which stands for non-habitual resident regime. I would assume that most people here, if not everybody, are at least familiar with the NHR meaning, or to some extent, there's a tax benefit behind the NHR. If there's a lot of people who have no idea of what the NHR is, maybe if you want to just leave a note on that so that I can also adjust a little bit, but I'll assume that most people would be somewhat familiar to it. And then finalizing with a bit of a couple issues that I normally see when dealing with US clients moving to Portugal, some things that come up very often. So I guess starting with the basics, general features of the Portuguese tax regime. I guess the question that comes up very often is, when do you start being a tax resident? And again, as a background comment, I will be speaking a lot about residency. When or for 99% of the times that I speak about residency, I speak about tax residency. So for instance, Virginie's mentioned a lot about residency, but that's on the immigration side. And keep in mind that these are separate residencies. Different authorities deal with that, and different requirements come with that. Of course, there's a lot of interplay with that, and it may happen that authorities share information and that there has to be some coherence between them, but these are completely separate, at least nowadays, in terms of how they are viewed. So from a Portuguese tax point of view, what the law says is that you become a tax resident if you spend more than 183 days in any 12 months period, or if you spend less time, as long as you have a house available to you in Portugal. In practical terms, what this means is that you become a tax resident the day in which you associate a Portuguese address with your NIF. So typically, generally speaking, the way this goes is you get a Portuguese tax number, which is the NIF, the NIF, because you need that to start the visa process. You need that to buy that property, to open the bank account, to work, to a million different things that you do before actually landing in Portugal. But that typically you do that with your US address, with your home address. You may have to appoint a tax representative. I'm not touching upon that. I'd be happy to discuss that further if you want. But the point is that you would typically do that with a non-Portuguese address. Once you change the address associated with the NIF, and the NIF will always be the same, the number will always be the same. But if you change the address, that's the day in which you become a tax resident. So in practical terms, these rules are made more in favor of the tax authorities in a way that they can control whether people are here under the radar or not. But for you, what you need to be aware of, you will become a tax resident the day you change the address into the Portuguese address. And that means that that's the exact date. So anything that happened before that date is not relevant. Anything that happened after that date may and will likely be relevant for tax purposes. So one of the things that we typically stress with people doing this move is look into the tax aspects, as with most other aspects, before you actually move to Portugal. The other thing is that you don't need to be here 183 days in a year to be a tax resident. Even if you are less time in Portugal, as long as you have a house available to you, you will still be a tax resident and you'll still be able to benefit from the NHR. Again, of course, keep in mind that there may be interplays with residency for immigration purposes that may require you to be here for a longer time. But what I'm saying is that this 183 days rule is flexible, at least from a tax point of view. And what does it mean when you become a tax resident? What it means is you become fully subject to Portuguese tax rules, and Portuguese tax rules are basically taxes on income. So you're only taxed on real income that you earn, and you could also be exposed to inheritance and gifts tax, although this generally does not apply to between spouses or between parents and children, and or if the assets are not located in Portugal. So typically you would, or a lot of times you would hear that Portugal doesn't have inheritance tax, which is not exactly true, but for most cases it would effectively not apply or not exist. So that's also big, an important thing of the regime. I guess moving on to the next slide, and still on the implications of the tax residency, and we'll touch upon this a little bit later. What that means is that you will have sort of a dual exposure, because you being a US citizen, as you know, you are subject to worldwide taxation on the basis that you are a US citizen, and you would be subject to worldwide taxation in Portugal on the basis that you are a Portuguese resident. And so we will address that later on, but there is this issue with dual exposure specifically for US citizens. On the NHR specifically, what the NHR is a pure tax regime. So it's not an immigration regime. It doesn't grant you any visa. So you always need to look into everything that was spoken earlier about the immigration side. But it basically, what it does is that you would generally not have to pay Portuguese taxes on income that you earn outside of Portugal. So it works typically very well for people who move abroad with income earned in the US in this case, that they wouldn't have any additional tax exposure in Portugal. And again, keep in mind that this is the general idea, but there are some particular rules that come into play. So this would need to be discussed on a case-by-case basis, but that's the general idea. One or two things on this. One is that it doesn't impact foreign taxes. So if you're subject to tax in the US for citizenship reasons, or say that you earn income from China for whatever business you do in China, there may still be taxes, Chinese taxes to be paid. The NHR would not do anything about that. So that would have to be looked into as well. And the other thing is that it doesn't cover Social Security. So for those of you who are still active, Social Security, the Social Security component could be something of relevance also, because it could imply an additional levy to be paid in Portugal, depending on particular situations. Going back to the NHR, this is a 10-year program, and which would apply to the extent that you remain as a tax resident. How does it work? In terms of the formal aspects, you apply online. The application is generally simple. You need to do it correctly, otherwise the tax authorities are not very friendly on that. If you make small mistakes, they'll just deny you the status, which doesn't make any mistake. But just make sure that the application is either done by someone who knows what they're doing, or that you verify upfront which boxes you should be ticking. And we can go to the next slide on the actual benefits of the NHR. And this is a very broad table on how the NHR actually works. So what we have here is different types of income and how they're treated for them if the income is earned domestically, and how they're treated if the income is earned outside of Portugal. And as you'll see on the right side column, if the income is considered as foreign income, meaning that is earned outside of Portugal, and foreign doesn't mean that you cannot bring it to Portugal. So it's not a remittance-based system. So what that means is, as long as it's earned outside, the NHR would apply, and you can still bring that into Portugal without being exposed to taxes. But as you see, to the extent that the income is earned outside, and generally speaking, an exemption would apply. The case where the exemption generally does not apply is with capital gains from financial assets. And again, the US has a particular aspect to that. I'll touch upon that later on, and I think Scott will also be speaking about that. The other exception is for pension income, which nowadays is taxed at a flat 10% rate. Before 2019, I think the exemption still applied for pensions. That's no longer the case. And as you see, for income that you earn in Portugal, the exemption doesn't apply. There is still a benefit for active income. So if you work for a Portuguese company, or if you work from Portugal, instead of the general rates that would go up to 48%, you can still qualify for the 20% flat rate. If the income comes from a high added value activity, there's a list of what is high added value activities. But for everything else, the Portuguese general rates, which is the standard flat rate of 28% for passive income, would generally apply. So the NHR doesn't really apply to Portuguese income. So if you have investments in Portuguese banks or Portuguese real estate, et cetera, those types of income would generally not be benefiting from any NHR disaggravation on the tax side. And that brings me to my final slide, which is a little bit of what do we normally see with US citizens. So the first one is on sort of a lost in translation kind of thing. So potato doesn't always mean potato. And what I mean by this is that different terms that we use with the same wording can actually mean or intend different things under Portuguese and US law. So capital gains is one, pensions is also the case for us. Pensions is everything that comes from retirement, even if it's Social Security or private retirement accounts such as IRAs, 401ks, etc. We would bulk all of that into the pension section or category. On the capital gains also, that for us is income. So I guess on the US side, you make a distinction between income and capital gains. For us, everything is income. So bear with us a little bit in terms of when you get into these discussions, especially if the person is not versed on the US side, that there may be some terminology aspects. The other aspect to this is that the same investment products may generate different types of income under Portuguese law. So that's a lot the case with 401ks, IRAs, and similar types of products. Depending on how you get paid and when you get paid, we may be looking at income qualifying as pension or income qualifying as capital income, and that could lead to different tax implications. So also important to look into. And the last point is on the legal structure. So typically with the LLCs and trusts, the way the US approaches this is not exactly the way Portugal approaches this. And this gives, in some cases, some opportunities for planning, and others some difficulties in planning. But keep in mind that these differences may lead to some need to further structuring. The other aspect that we often see is this aspect that you have to deal with double exposure. Assuming that you move to Portugal but retain your US citizenship, you'll be subject to worldwide taxation in the US and subject to worldwide taxation in Portugal. And what that means is that for US citizens, the NHR is not that much of a treat as it is for other people from other countries. I guess the name of the game for US people with the NHR is to make sure that they don't get in a position that is worse off than if they had not moved to Portugal. And that is oftentimes achievable, but that's the general idea. It's not so much a benefit, is that you don't get an additional tax burden because you moved to Portugal. And in connection with the NHR, it's also for this neutrality effect to be achieved, it's also important to understand the credit mechanisms under the Portugal-US double tax treaty, and who would tax what and who would be able to credit for taxes paid in the other country. And in connection with that, one question that we get asked a lot is to do with submission of tax returns, compliance obligations. Where do I file first? Do I file first in Portugal and then bring my filing to the US? Do I file first in the US and then bring that to Portugal? I don't really have a clear-cut answer to that. Typically, what we've learned is that it makes it easier for people to file in Portugal first and then in the US. But keep in mind that the filing system is a bit different. In the US, as far as I understand, you file the tax returns, you assess your own taxes, and you pay whatever taxes need to be paid. And the tax return is much more itemized. So every time that I get a tax return from the US from my clients, it's also a good number of pages. The Portuguese tax return is much simpler in the sense that everything is bulked. And that makes it harder for you to get finer information if you need to go into the details. Also, the other thing is that the Portuguese tax assessment system, the way it works is you report the income and wait for the tax authorities to come back to you with the final tax assessment. So there's always a delay between the time that you submit your tax return and the time that you get the tax assessment back. Of course, I mean, a seasoned tax advisor could tell you what the exposure is going to be, what the taxes are going to be, but you'll always need to wait for formal validation from the tax authorities. And the last point that I'd like to touch upon is the curious case with the capital gains. As I said earlier, typically capital gains, and I mean capital gains from financial assets, not real estate, from financial assets. As I said, generally speaking, under the NHR, capital gains from financial assets are not exempt under the NHR. So what we've seen so far is that US citizens, as with most other people from other countries, have been having to pay 28% Portuguese capital gains tax on US capital or on capital gains earned on US, say, fund income or ETFs or whatever financial investments. There is, however, an argument, it's a very technical argument based on a specific rule that comes with the Portugal-US tax treaty that I'm not going to go into the details here, but the overall idea is that if you read the NHR rules with that rule that is very specific to the Portugal-US treaty, that should lead the capital gains to be tax exempt. The tax authorities have not yet accepted this view, but all cases that have been going to court, at least all that I know, have been decided in favor of the taxpayer. So what we have nowadays is a bit of a mix of you will have to pay, but if you go to court, you will very likely win the case and get the money back from the tax authorities plus 4% interest. And I hope that at some point in time, the tax authorities will come to terms with this interpretation and stop assessing capital gains tax. We are still to see what's happening with this year's tax season, but something to be developed over time and keep an eye out, because if you have a large exposure to that, you may want to consider whether, I mean, what the next steps will have to be if you need to resort to court and litigate the tax authorities on this. And I guess that's all from my side, Ricardo. Thank you very much, guys. I'll be also available for any Q&A that you may have on my side. Thank you very much.
Perfect, Jose. And I'm pretty sure you're gonna have some questions thrown at you a little bit. But for now, I will pass on to Scott, which will address the financial planning that is required or recommended for Americans when they're moving to Portugal. So, Scott, I will let you introduce yourself and take the floor.
Thanks, Ricardo. I'm Scott Evans, and I'm a cross-border financial planner and investment manager. I specialize in working with Americans currently living or moving overseas. I'm both a CFA charter holder and a certified financial planner. And I've been working in the wealth management industry for 25 years, and I have lived overseas as an American expat. And I just need to kind of provide a disclosure that none of this is investment advice or tax advice of any kinds, and it's just for educational purposes.
If you don't mind me budging in, Scott, I also want to add that to my presentation. Apologies for not having said that. Just for US people are always contentious.
Yes. Yep. It's a requirement for us. So just 1 second, if I can get my slide. Okay. So this is what I'm going to cover is what you need to think about from a financial perspective when planning a move to Portugal, the differences between the financial and tax systems between US and Portugal, your ongoing US tax liability and filing obligations once you move abroad or move to Portugal, and how the NHR regime is different from Americans than it is for most other nationalities. And Jose already kind of touched on that, but because of our citizenship-based taxation, it essentially eliminates a lot of the benefits of NHR that most other nationalities experience or can take advantage of. And then finally, some pre-move financial planning considerations. So some of the things that make financial planning a little more complicated for Americans in Portugal is due to the US's unique citizenship-based worldwide taxation. No matter where we go and where we live in the world, we're always subject to US tax liability and US tax filing obligations. So while most other nationalities are a residence-based tax system, and they're only subject to one tax regime when they move to another country, we're always subject to two regimes, and that really is what is the basis for most of the complications that arise being an American overseas from a financial perspective. So many of the U.S. financial structures and concepts are not explicitly recognized by Portugal, such as Jose already mentioned, kind of IRAs, 401ks, trusts aren't treated the same way, and that complicates matters for us from a financial planning perspective. And then from a financial services regulatory perspective as well, the European Union has different regulatory requirements than the US. And sometimes those, and a lot of times those are conflicting and at cross purposes, which make it difficult for Americans to create and maintain tax efficient, diversified investment portfolios, as you'll see in a minute. And all of that kind of results in a lack of interest and availability of qualified financial services providers that will work with Americans. We saw about 2 years ago that Wells Fargo completely got out of the business and essentially just said, find another place for $40 billion of Americans' assets for Americans living overseas. And I think we found that that's more of the trend, is that most financial services firms don't want to work with this element of their client base, essentially. So these are some of the issues that you'll face when you move to Portugal. Is initially the PFIC issue, in that the IRS doesn't want Americans investing in foreign mutual funds, foreign ETFs, any type of collective investment fund that includes cash value, life insurance, offshore pension products, anything like that, any type of passive collective investment fund. The IRS puts a punitive tax at your highest marginal tax rate rather than the preferential capital gains rates. And then you also have an annual reporting requirement on each of those PFICs, which can be very expensive if you're having somebody do that for you. And then the European Union has a consumer protection law that basically prohibits any European residents from buying US ETFs. So you can't buy US ETFs, you can't buy European ETFs, and you're kind of stuck in the middle. It makes it problematic for Americans living overseas. Well, living in Europe, I should say. So again, because we are, we have to abide by the US citizenship-based taxation, and we have this requirement to, we're always subject to US tax and reporting obligations. We're required to comply with the IRS code at all times. Then as far as how that relates to the tax professionals, because we have two tax regimes to manage instead of one CPA or tax advisor, then as Jose alluded to, he specializes in working with the Portuguese side, and he is, well-versed on international clients, but he's not, can't work on the American side. He only does one half of it. So you have to engage with two tax advisory professionals to cover both bases. And then since FATCA was passed, most foreign financial services firms have quit working with or limited their work or ability to open accounts for Americans overseas due to their reporting and obligations to the IRS and to the US. It's just simpler not to work with Americans for them. And again, it just makes that hard to find, qualified financial services firms and professionals that are willing to work with Americans. So what is so different about Portugal in comparison to the US? The tax rates are much higher, as are most European countries. And this really applies to the post NHR period, as I'll get into, I think, on the next slide. But tax rates approach 48%, and they get there very quickly based on the levels of income compared to US rates. The US capital market system are the most well developed in the world, and that creates very low expenses, very low fees, limited transaction costs, and a very broad variety of investment options. Portugal, on the other hand, is much smaller, and those fees, costs, expenses, and are much higher, and the investment options are more limited. And then Jose already alluded to this, but there are inheritance and succession planning differences. There's a forced heirship rule, but it's not really actually that important for Americans because it's usually typically only on the Portuguese assets. And for Americans, most of their wealth and assets are back in the US, and that's how we typically advise Americans to keep at least their investment assets. And then again, as Jose already kind of alluded to, trusts are not treated the same way as they are in the US. And in the US, they're excellent tax planning and estate planning tools. In Portugal, they're transparent. They won't recognize that, and they'll see through the trust. And so it doesn't really, whatever that trust is designed to do from estate planning or tax planning perspective is not going to be effective in Portugal. So what does this mean to you in practice? Since there are no, like for like 401k to IRA comparisons within the tax code, it is open to interpretation on how these are treated. And really what's important for you is to understand how your tax advisor is going to treat withdrawals and the tax implications from these type of accounts, and be on board, understand kind of how they're going to be treated, be on board with it, and then have your financial advisor, financial planner understand that treatment as well, so they can craft their financial planning strategies to align with how the tax treatment is going to be according to your tax advisor. I think that's the most important thing, is that your planner, really the tax advisor informs the financial planning piece of it. And then Portugal does not recognize the tax exempt treatment of Roth IRAs or Roth 401ks. So that is one of the areas where the double tax, the tax treaty and the avoidance of double tax might come into play, because Roths can be treated as either a taxable brokerage account, or they could be treated potentially as a traditional IRA where they'd be taxed as ordinary income. So that really creates a lot of issues, because Roths are kind of one of the go-to mechanisms in the US to lock in the tax rate and never have to be taxed on that again. But that changes when you move to Portugal, so you need to be careful there. And then the capital gains tax rate for financial instruments is 28%. It's much higher than the US rates of 15, 20, potentially 0 in some cases. But this is also kind of a complicated situation in that technically you're supposed to be taxed at Portuguese tax rates, but because of the savings clause within the double tax agreement, the court cases have found in favor that you only owe capital gains liability to the US, but there's no precedent in Portugal. So it's not actually, as Jose said, you have to go to court and fight that case, even though they've all been found in the favor of the Americans fighting it. It's still not, it makes things murky and complicated, I would say. And then again, trusts may no longer be fit for purpose for what you intended them to be when you designed them. So just a quick look at, this is for single filers, but I just wanted to show how quickly that you get up into that 48% tax bracket. Above essentially about $85,000 of US dollar income, you're already in that 48% bracket. This only applies post NHR. And really, I'll explain this in the next slide, is a lot of the planning that you will do over that 10 years of an NHR period is to limit or be as tax efficient after NHR when you jump up into this 48% tax bracket on a lot of your sources of income. So there are bilateral tax agreements between the US and Portugal. And in most instances, you will not face double taxation, except for like in the specific case of Roth IRAs or Roth 401ks, which does have the potential on withdrawals to face taxation typically on the gains, but like we saw, it could be treated as just an IRA as well. And then these tax treaties were created to, create a mechanism or tool or process by which each government knows who can tax what type of income and what type of assets and in what order, as Jose alluded to earlier. And some of that comes down to the timing and when you file your taxes and whatnot. But essentially, under NHR, actually, let me wait till the next slide. I can explain that. But the savings clause, that's contained within these bilateral tax treaties, basically negates most of the advantages of special low tax regimes like NHR or any other kind of tax holiday regime throughout Europe. So as an American under NHR, and this is different than any other nationality, you are still a net US taxpayer. So Portugal has the right to tax, and I'm talking specifically about retirement income, or what Jose referred to as pension income, what we think of as Social Security, IRA, 401k income, any of those things. So Portugal essentially has the first right to tax at 10%, but whatever your US tax obligation is, you have to make up the difference to the US. So you are a net US taxpayer throughout the 10 years of NHR. And while that, that doesn't sound great, it actually is an opportunity to do some financial planning and strategies to minimize your effective tax rate after NHR when you jump up to that 48% rate. So that's really where this comes into, is taking advantage of that 10 years where you're a net US taxpayer to limit your higher tax exposure to 48% rates after NHR. And all of that means that, unlike most nationalities, Portugal is not really a tax haven for Americans at all. So some things that you can do prior to moving to Portugal to help this financial planning scenario, your financial planning scenarios, is the beginning planning at least the tax year prior to your move. Hopefully a little bit more than that. It does two things. It gives you a longer runway. Instead of just the 10 years, you could extend that to 11 or 12 tax years, where you can spread out some of that income and become more tax efficient in your planning. It also allows you to have continuity with your accounts and financial services providers before you leave the United States, because it's fairly simple to open an account and get set up with a firm that will allow you to have an advisory relationship and maintain your account once you're in Portugal. Once you're in Portugal, if you try and do that and you no longer have a US address, it's very difficult to open an account and do it you're from the back side, I guess you would say. And then the other piece of that is, even if your financial services firms, a lot of times 401k firms will let you change your address and they allow you to keep the account open, you're limited in what you can do. They won't let you purchase any more funds or ETFs or anything in your account. So it's somewhat of a kind of a frozen account and a loss of control, even if they will let you keep the account and the relationship open. And then typically, because of all these complications and those opacity between the two different tax regimes, it's usually better to not use complicated structures, trusts. As I mentioned, that they won't have the effect they want in Portugal, but just keep things simple and transparent. Because, for example, Every country understands what a stock is. Every country understands what a bond is. But when you get into, offshore pension structures and some type of corporate structures to avoid taxes or minimize your taxes, that's when I think you get yourself in trouble. And then I think for Americans, you need to kind of look at your time in Portugal as 2 time horizons. One, the 10-year period where you're a net US taxpayer, and then the post-NHR period where you're a Portuguese taxpayer. And really, that's kind of how you need to approach the planning piece. So I guess that is the end of my presentation, and I will be around for Q&A later. So back to you, Ricardo.
Fantastic. Thanks a lot, Scott. And now we have Eva from Moneycorp. And Eva, if you could please share your screen and present your presentation.
Thank you, Ricardo. Does everyone see my screen?
No, because I need to do something.
No problem. And thank you all to all the presenters. Great information. I'm learning along with the audience. So thank you all. Am I good to go?
Yes.
Okay, perfect. Well, hello, everyone. My name is Eva Slavcheva, and I will talk to you about currency exchange, and we'll talk about things to consider when moving a large amount of money from the US over to Portugal. I myself actually moved from Europe to the US many years ago. So having been through the process, I feel you. There's a lot to do with mortgage, with immigration, with taxes. That's a fun one. And of course, with currency exchange. So a lot to consider. I joined Moneycorp 9 years ago now, and the majority of my clients are moving to Europe, especially in the last 3 years, Portugal being one of the hotspots. So all that we do here is specialize in currency exchange and international payments. If you'd like to learn a little bit more about Moneycorp, check out our website. We have teams in lots of different teams in lots of different countries. And I'm joining you today from Orlando, Florida, and it's very, very hot here today. I think about 32, 33 degrees for my Portugal friends. Our website has a lot of information, daily market updates, weekly market updates as well. So if you're wondering why the US dollar is moving one way or another, go there, sign up for those updates, and start planning for that transfer process. Using a currency exchange company in general can help you not just for moving money when you're buying property, but for anything else you do. If you need to move your pension, if you need to pay for living expenses, whatever it might be, anytime you're moving country or moving money from one country to another, it's a good tool you can use. So the main thing I'd like for everyone to consider today is learning about the difference between using a bank and using a currency exchange company. A lot of my examples and my slides show Moneycorp, but in reality, there are a lot of international payments company. We're one of the best. I'd love for you to use us. But that being said, I just want you to learn about the charges that US banks have in place so that you can compare and make the best decision when moving money. If you visit a typical US bank, you're going to see 2 charges. You're going to see an international wire fee, which is typically a flat fee. It could be $30, it could be up to $60, and it's something you pay every time you move money internationally. Oftentimes, clients think that that is the total cost of moving a large amount of money over to Portugal. In reality, there's actually a margin taken on the exchange rate, and that's often the hidden charge. Your typical bank teller will not be very forthcoming with that information unless you know the right questions to ask, such as what margin are you taking on this exchange? So be aware of that. And the third thing to consider if you will be using your bank is that you're getting the exchange rate of the day. The exchange rate market is live, it's ticking every second. If you get a quote in the morning and get a quote in the afternoon, it's likely going to be different. And this can really impact how much dollars you're spending on purchasing a property in Portugal, for example. So working with a currency exchange company, you can save in quite a few ways. And like Scott mentioned, you can plan early, which I think is the key point here. You'll get a far better rate of exchange using an international payments company. You'll avoid international wire fees, but you do get actually a dedicated currency specialist, someone that will speak with you, guide you through that process, discuss your transfer needs, give you information on the market, on what the exchange rate is doing, and give you tools to exchange from US dollars to euros at the most favorable time. We can do things such as a watch order or a limit order, whereby we can purchase euros for you when your target exchange rate becomes available. We can also do a forward contract where we actually lock in the rate of exchange for anywhere up to 2 years' time. So really, really great tools, and it can really help you save a lot when you're moving a large amount of money internationally. It's a very simple process. Again, this is an example of how MoneyCorp works, but most international payment companies work very similarly. You establish a free international payments account, you secure the exchange from dollar to euro, you fund your MoneyCorp account with dollars, and then you tell us where to pay the euros to. We can pay to multiple recipient accounts. At the moment, the majority of my American clients are going through the Golden Visa investment program. And that's the biggest reason for transfer I'm currently seeing for transfers to Portugal. Clients are investing in a Golden Visa, and we're sending funds for them to secure those projects. If you find yourself needing to move money from Portugal back to the United States, you can use the same international payments account. The process just works backwards. Again, you're avoiding the international wire fees, and you're getting a far better rate of exchange than going through the bank. I'll give you just a quick example so you can see a typical amount of savings. We'll take Jane from the US buying property in Portugal for 400,000 euros. If she gets a quote from her US bank, she'll see she'll be paying about 112 on the exchange rate, and it will cost her $448,000 to buy that property. If she quickly gets a quote from us, she'll now only be paying $436,000. So that's a very typical amount of savings. I encourage you, before you move a large amount of money, get a quote from your bank and compare so that you make sure you're getting the most for your dollars when converting to euros. Along the way, you get statements, transfer updates, and again, our team can help you over the phone really from start to finish with this process. Planning early. If you guys take a look at these dates, you'll see how much the euro US dollar has been fluctuating lately. Last year in July, it actually hit parity between the dollar and the euro. And again, I think in November. So we were extremely busy last year. We actually had a lot of American clients who purchased euros and just held those euros on account with us. Those clients did not yet have a property in mind. They didn't have a flight booked to Portugal. They didn't even know necessarily if they were going to purchase there 100%, but they wanted to take advantage of the market. And now those clients are laughing because they're saving about 9 cents on the dollar. So you do the math on 400,000. So again, plan ahead, just like I think every one of the presenters said, don't leave currency exchange as the very last thing on your to-do list. I see it happen all the time. If you call me the day before you're closing, I'll be more than happy to help you, and I'll still save you money versus going through the bank. But you can save a lot more if you start the process 3 months before, 6 months before, and let us help you navigate the market. Things to consider for US banking, consider your online banking limits before moving a large amount of money, especially if you haven't moved a large amount of money before. Check with your US bank to see how much can you move out at one time, how much can you do online, do they require you to be there in person? A lot of US banks do. If you need to raise those limits, you probably can request that, but easier to do in person rather than when you're already in Portugal trying to speak with customer service. We're also noticing if a client fully moves out to Portugal and no longer keeps a US address linked to their name, US banks don't really love that. And we're seeing some banks closing the bank accounts for clients that no longer have a US address. This is not happening to everyone. This is not happening across the board, but just something to consider and plan ahead so that you don't get stuck in a bad situation. This is really just to keep you updated. The market is live, it's ticking, it's moving. If you're watching the news, there's always something going on that will affect the exchange rate. It could be something big like a war. It could be something small like a Fed announcement, unemployment rates, you name it. But over the last few years, we've had not a shortage of global events happening, and all of those really caused the US dollar to go up and up and up. Generally speaking, you see something bad going on in the world and you will see the US dollar go up. It's a safe haven currency. That's also when we saw the beginning really of Americans investing in Europe quite heavily, because technically Europe was on sale for us. So that's one of the reasons. But just keep in mind and keep an eye on the market. This year, we're seeing more, these are examples of the Money Corp website daily updates that our team posts. We're seeing more information about the dollar going down. Stay updated on this. Don't wait until the last minute. It could really work against you. This is a quick look between the euro US dollar in 2020. As you can see, it's mostly a chart headed downhill because we had a very strong US dollar. If you take a look at the same chart this year for 2023, it's mostly going uphill. We're just seeing a recovery in the markets. Inflation is slowing down. So technically speaking, for our American viewers, the exchange rate, if you're buying in Portugal, can be looked at as potentially moving against you a little bit. So please plan early, purchase euros, use tools such as forward contracts so that that property in Portugal doesn't end up costing you a whole lot more in the end. If there's any questions, here are my contacts, and I'll bring it back to Ricardo. Thank you all for your time.
Thanks, Eva. That was fantastic. And again, you pointed out the most important thing, which is planning ahead is really, really important. So now we reached the end of our webinar, but I would like to take, because we've been going a bit over schedule, but I would like to take the opportunity to ask or choose a couple of questions that I see that are most important and ask to our experts. So let me just open here the chat box, and thank you for everyone that asked questions. Again, if I don't pick your answer, you will receive a response from me later on an email. So do not worry if you don't get your answer right now. Sooner, later today, or sometime tomorrow morning, I will address your question. So I'll start with Craig, which asks, is Portugal considering ending the Golden Visa program? So Virginia, you probably the best person to give an answer on this.
Yeah, I'll do my best at least. And I forgot to introduce myself actually, but I'm a global immigration specialist, so that's why I'm here today. Basically, yes, it is true that in February of this year, the Portuguese government decided that we're going to stop the Golden Visa because of the housing problems in Portugal. But it's still been going on. Discussions are being done at the moment on whether the Golden Visa would be different. I mean, there are different options being considered by the government. Until now, the applications that have been done before that decision are still being processed. New ones can be done as well. And in the end, once the decision is made, request will be accepted, but discussions are still going on. So nothing final, no final decision made up to today.
Okay, very well. Yeah, I think there's, as a Portuguese, following the news, I think there's going to be a ruling or some sort of decision in June 30th this month. So we'll know more from there. So next question from Kaylee, regarding tax implication for US citizens whose income is primarily 401k, IRA, or savings. Please explain the double taxation. Are there any exemptions for US citizens within 10 years of seeking residency? I'm not sure Scott or Jose can clear some of the question here.
It's probably more suited to Jose, but yes, I kind of touched on this. Pension income under NHR is taxed at 10% by Portugal, and then whatever your effective U.S. tax rate, you would owe the difference to the United States. So there is no double taxation. This is one of the things within the bilateral tax treaty that avoids double taxation. It's just who taxes what piece first. And the first piece goes to Portugal at 10%, and the remaining amount, whatever you owe over and above that, would go to the US.
Yeah, I mean, just a quick comment on that. I think I totally agree with what Scott was saying. So I guess the double taxation issue is not really.
And
Yep.
That there's a question saying, sorry, Jose, it was my connection just dropped a little bit.
No worries. I was just agreeing in adding a tiny bit, but I guess for the benefit of time, if you want to move forward, we can. But again, ultimately, what Scott said is what the relevant aspect is.
Okay, fantastic. And for you, Eva, Carola's asking that she was at the bank to transfer some funds and they were going to charge me significant transfer fees. How do I avoid that?
We can avoid that a few ways. Can you guys hear me and see me?
Yes.
Okay. We can avoid that a few ways. You can essentially set up your MoneyCorp account as a recipient on your online banking, and you can set up an ACH payment. There's typically a 1 to 2 day account validation to do that. Your US bank account will want to validate this is a valid recipient account by sending a test payment to us of under $1, a few cents. Once that amount is received and validated, it's essentially MoneyCorp's account becomes a drop-down recipient on your US bank and you can move money. Now, again, check with your own US bank to see how much money you can move at any one time. It varies account to account with your profile, but that's an easy way to avoid any transfer fees when moving the funds out.
Okay, perfect. So again, yeah, most of the other questions relate to the similar thing. And so there's going to be a recording of this presentation, which I will send out as with the contacts for all the presenters. So feel free to get in touch with us. Again, proper planning is necessary. So feel free to schedule meetings with the right people that we have here today. And you'll hear from us and definitely from me very soon. So if you have any more questions, feel free to contact us again. Okay. I would like to thank everyone that participated today and for everyone that joined, and hopefully see you soon.
Thank you so much, Ricardo.
Thank you.
Thanks, everyone.
Thank you very much, guys. Bye-bye. Nice to see you.
Bye-bye.
Bye-bye.
Bye. Have a good day.
Thank you. Have a great day.